Okay, so I'm going to use exercise 316 to go over closing entries, and this may be review for some of you, but we'll just go for it. So first of all, the closing process, you're going to close the revenues to the income summary. Remember these accounts. Close the expenses to the income summary, close the income summary to retained earnings, and then close the dividends directly to retained earnings. So let's just do that. We'll start off with the closing the revenues, and you'll see that we've got basically one revenue account here. You could have rent revenue, sales revenue, service revenue, all kinds of stuff. And in order to close our sales revenue account, we're going to just debit that. So we'll go sales revenue, and then we will credit our income summary. Okay. And so that would be 4,410. So that's the first step. We've done that. The next step, we're going to close all our debit balance accounts, which would be the expenses. So we know we're going to be crediting them to close them, so we're going to be debiting the income summary for the total of them all. And so we're going to be closing all the expense accounts, but we also close the contra sales accounts. So we'll be closing our sales returns and allowances, our sales discounts, and we'll be closing those by crediting them for the 12,000 and 15,000. We have to not forget to close cost of goods sold. That doesn't say expense, but it's probably one of the biggest expenses, so we don't want to forget to close that. And then the others say expense. Those are pretty easy to remember to close. So you get your selling, you get your administrative expense, and you've got your income tax expense. Okay, so we got the 16, the 38, and the 30. And if we total those all up, we get 3,367,700. Okay, so now sometimes it's helpful to, we'll go through actually the third step here, which is to close the income summary to retained earnings. So you get sales of this amount, you've got really expenses that you're deducting of less than that. So you know you're going to be debiting the income summary and crediting retained earnings because you're in a situation where you have net income. And so you're going to credit your retained earnings account for the difference between those two, because that would be the current balance in the income summary. So 73.3 and 73.3. Okay, that's going to be this minus that. And if you do out the T accounts or ledger accounts on it, that may help it make more sense to you. And then we close our dividends directly to retained earnings. Okay? And that would be for the 18,000. So that's your basic closing process, and hopefully that was helpful.